Let's get some reaction on what's happening on the markets. I'm joined by Bright Kumalo from Vestec Asset Management. Bright, thanks so much for your time. So if you had to describe the coronavirus's impact on the market so far, what would that description be?
So what I'm doing, the latest, in terms of looking at what the coronavirus has done is that we're receiving a slew of results from, Chinese listed companies, basically saying that some of them on average are saying between 50 and 60% of their earnings. That's what they expect to lose in the first quarter. So it'll be very interesting to watch out for that when we come to our reporting period. But the biggest industries that have been hit during this lockdown season, obviously we've already mentioned this, is anything that has to do with tourism, travel and tourism. So if you happen to operate in that industry, including restaurants, you've basically seen your revenues literally go to zero, or you're losing about 98% of your income. And, the rest that you're making only online, whether it's food delivery or anything of the likes, like the likes of Uber Eats, who are now, delivering essential items from their platform.
Mm-hmm. Let's talk about South Africa and the effect that the coronavirus, but more especially the downgrades have had. Before Moody's downgrade, we kept on hearing from analysts like yourself that, the downgrade was priced in, so it wasn't going to be too much of a shock. And then when that Fitch one came in, it doesn't seem like that was priced in so much.
It's always, it's always said that, it's priced in, whatever, but reality always is different from what everyone thinks. A perfect example here where we had the rand at 17 rand and we thought that was, the worst of the worst. But we woke up this morning, we saw the rand at 1929, its worst number yet recorded basically in history. But as we sit today, the last time I checked, it was sitting around 18 rand 92 cents. Still not looking good, but, about 0.7% stronger than we were this morning. Fitch, unfortunately, was already had us, in junk status. So they were just, taking us even further down there because they've always, went for the chin from the get-go. They didn't wait and hope that things turn around in South Africa. I hope that's a wake-up call for our leaders, especially political leaders, to say that to take these things a bit more seriously. But obviously, the most recent cause of the downgrade has been mostly the COVID-19, which is, strike the rest of the world, the whole world, by surprise. So it has nothing to do with, political uncertainty.
Mm. So with that amount of uncertainty, though, Bright, in the markets, how does an investor act now with so much chaos around them as well?
It's always hard to call a bottom and Zinga. And I always say if you are an investor, a long-term investor with more than 10 years, runway towards your retirement, these kinds of periods, they provide great buying opportunity for you, but you will never time the bottom perfectly. So you have to buy on your way down and have to buy on your way up. And obviously, it also, for those who are seeking income from their portfolios, it always brings upon a great opportunity for rebalancing. If you're seeing a lot of companies that have a lot of debt in their balance sheet or operate in the entertainment, travel and tourism space, it's probably a great time to get out.
Okay, so then speaking of that, there is also a glimmer of hope, though, when it comes to investments, those Asian and Euro stocks somewhat up and US futures equities as well.
Yeah, I mean, that's mostly been this thing of volatility that we've been seeing that happening since, the first case of coronavirus was announced outside of China. So markets were up 4% one day, the next day they're down 7%, then they're up 9%. And if you look at the U.S. markets, you would hit, the stop going up and you'd hit the stop going down. Those triggers haven't been seen since 2008. So we are actually in uncharted territory. But like I said, this only provides great opportunity for long-term investors.
Okay.
And the patient investor, yeah.
So something that I found quite odd, and maybe I don't understand it properly, when you're looking at healthcare stocks, especially of the hospital groups, the private hospital groups in South Africa, I would have expected those to be doing quite well because of the health challenges that are surely going to come to countries like South Africa. Doesn't seem like that's the case.
Not necessarily. What the market is basically saying is that we've seen what has happened in the rest of the world. We've seen in Italy, Spain, Germany, and most recently in the UK, where basically political leaders have said private hospital and medical health care providers will have to step in, at a marginal rate to open up their hospital to the rest of, the citizens of South Africa. So that's probably what they're pricing in there. But in terms of capacity, yes, the hospitals will be at full capacity in terms of, their hospital beds, and their bed rates will increase, et cetera, which is good for the bottom line. But also that is capped to the maximum number of those beds that those companies have. It's not like a technology company where all of a sudden everyone wants to advertise with them because traffic on their website, like Google, for example, has seen 1,000% increase in the space of 2 weeks. That's not the case here. The case here is that the upside is limited. There's only so much upside.
And as we go, talk to us about South Africa borrowing that $1 billion. What's happening there?
Yes, so South Africa borrowed basically $1 billion from the New Development Bank, which is famously known as the BRICS Bank. This is to help with, the coronavirus response, meaning that we've seen that the government has been actively relocating people in some informal settlement and putting them into better housing. And, the street people that we've seen, they're providing meals for those people, et cetera, et cetera. This will help aid some of those problems that they are forced to, attack them immediately and not putting them in the back burner for political reasons anymore. So now they have to act with certainty and determination.
Brad Kumalo from Vestac Asset Management, thanks so much for your time on SABC News this afternoon, taking a look at the market picture. And that brings us to